or to wait the 20 years for it to win? Are you willing to put up 1% of risk 3% of risk to get a less than 1-to-1, right? So remember, guys, if we put $1 million on this, 1 million, how much are we gaining if we win? 200K. Okay, now we did it 3 times and we've used up all our leverage. We used up all our buying power. So now we can gain 600K. We might lose 3 mil, but we might gain 600K, and it's likely. And then Price does this for a few years. And then 6 years later, it hits take profit. Now let me ask you, are you happy with the fact that you put up 3 mil, locked up all your money, and 6 years later, through inflation, through all the other opportunities available, you made 600K off your 6 years, off your $3 million that was in the bank that you had to lock up instantly? Well, some people are saying yes. I would say that's a fucking terrible return. You'll get more return literally milking cows. Bro, like, it's terrible. Why would you ever do that? Right? Your money's locked up. Why would you not take that $3 million, okay, and just put it into, let's say, a treasury and get 6% on it every year? That's already 20 fucking thousand times more. Right? People don't realize this, but so I have some money in treasuries, right? Because, well, of course, because, you know, investments. 3 mil at 6% a year for 6 years, you would have made $1,100,000 just locking your money up for the government. Right? So clearly you could have put your money to work in significantly better ways. Right? Which begs the question, does a 100% win rate, really good strategy, you know, like this, is that a strategy that you would want to actually follow? Right? And the answer is, of course, no. Because now you start realizing it's not worth it from a risk perspective. Right? So Ryan said something very interesting here. And it's actually one of the main things we're going to talk about in a second. But this is one of the first steps to understanding why we're risk first, right? Your money's locked up. You can't put it to work. You're thinking about prices from a wrong perspective because now, even though you're right all the time, you're not actually making money. So what's the point of not losing if you can't make money? Now I'm going to do something even more, even more interesting, right? Look at this. Let's assume this kind of a approach to trading used on this market right here, again, a random market, doesn't matter what market we're on, used on this random market here from the beginning of time, from this first break. So let's go for a long here, right? And we'll get into new longs every single time. And that one's at when price was at 0, like that. Okay. Then we enter a new one when that one wins. Boom, we won. Wait, that's huge. We won. Let's do it again. We won again. Put the stop at 0. Now we're in a new trade. Okay. Stop at 0. Okay. Does this system, to the naked eye, without anything else, guys, look good? Do you think if you were a brand new trader that you would pay for a signal group that had this kind of showcase of the win rate they have and everything? Yeah, the answer is yes. A lot of us have been there. A lot of us have done it. I haven't, luckily, but a lot of us would. Many people would. Many people do. They actually do to this day. Would I actually have? Exactly. Yeah, would have. Exactly. Many people have, right? Because it looks profitable. Okay, it looks very profitable. Now, again, let me ask you. Look how long this trade took to win. This first trade that did win, it took 115 days. And you made a 0.34x on your risk. Do you think you could have put your money to work in other ways that could have made you more than that money if you had it not locked up in a trade like this? And I'm not asking just from a trading perspective. I'm literally asking from anything, right? I'd rather take my money to fucking anywhere, honestly. Yeah, to milking cows, bro. I'll take my money to a farmer and just tell him to milk a few more cows, and I could make more money probably than 0.34x. Okay? But look, it still worked. Okay, so this one worked. Great. It's a good system, right? It worked. Then the next trade we got in, did it work out? Did the next trade work out? Did this second trade work out, guys? You know, it's of course, this worked out. It's a win. Is this third trade potentially going to work out? What is the actual likelihood this trade works out? This one right here, to get to the long, to the high here. Probably 99%, 98%, 95%, 90% likely. The odds of this going bankrupt over going to 61.58 is much higher. Is much lower. It's much more likely to go to 61 than it is to go bankrupt. Of course, we're not stupid, right? No shit. But our money's now locked up again. And what can price do from here, right? Let's think about the fox and the hare. What can price do now? Right? It could do this for a few years if it wanted to. And now our money's locked up. And is our money put to work now? Or can we put our money to work? No. Now, let me ask you a further question. Let's say this does eventually get here. What's the win rate on this system? 100%. It's a beautiful win rate. Did the fact that it's 100% win rate make the system very good? Does it make the system very good inherently? Not at all. It actually makes the system one of the worst. Okay? Now let's introduce losses in a new way. So here we are, right? Here we are. Let's put that into its own little 1, 2, 3. Let's put that into its own little folder. We'll call that the signal provider. Okay? The good old signal provider folder. Okay, we're gonna hide that for a second. We're gonna make a new folder here. Here, we're gonna put a new long on. We're gonna make a new folder. We're gonna call this one the risk first approach. That's what we're teaching right now. Okay, now let's take this a step further. Let's do it from the analysis of MentFX. We're gonna put on the MAs just for the sake of analysis here. So if you're new, don't worry about this. You're gonna learn all about it and how to use it if you wanted to use it, all the fun stuff. So price is very bearish, nothing's really happening. Then MB1, SSC, absorption, MB2, clearly a bullish market, pulls back, doesn't really give a clean entry, takes off, so we don't get to trade any of this. So none of the time here we were able to trade. Okay. Then it kind of starts surfing and goes a little bit sideways here and then breaks out. Maybe you take an entry here. I'd probably say it's an okay entry. It's very bad RR-wise, but let's say we took it. About 1, 2, 3, maybe on this day here as it begins to fail, we probably sell half of it at 0.87. So we probably secure about plus 0.4 RR. And then price hits break even. So we're out of that trade. Then we don't touch it again after it breaks even. So that's right here. Then we don't touch it again. Well, actually, no. Then it begins to surf again. Goes tight. Breaks out right here. So you take that as a long. Your stop goes under the low. After it begins to lose its momentum here, you probably take a half off, maybe around here. So again, another little plus 0.5er. Nothing really crazy right now, just small. And then breaks even again, right? So this was no touch zone. No touch, no touch, no touch. I probably wouldn't have traded this, even though it made a good move. I probably wouldn't have traded it. I would have missed it. Reaccumulation model into MBs up. Beautiful, into MBs up. We're still not touching, not touching. Then it starts building tight range. Gets tight across the top, breaks out. We take a long here with the expectation this is going to keep going long. I actually took this trade myself. I'm actually still in this trade right now. I managed this a little bit poorly. My management's getting a lot better recently, but I would probably say half will come off during this down move on that day, as that's momentous. So we probably take off half right there for a plus 1.5. Okay. And the rest is still running, but we're just going to assume we closed it right now just for the sake of today's example. So plus 2. Okay. Now, and let's actually take it even a step further. We're going to take it even a step further. And let's say we did, inside of here, for some reason, we traded on this day and we took a loss. So let's put that in, -1. Even though we didn't, let's just say we did, -1. Let's say we even took a breakout this day and took another loss in there. So we'll take -2. -2. Let's make this little guy smaller. So nothing to touch inside of there, nothing to touch inside of there. Okay. So now we have something interesting. Has our win rate dropped dramatically for this system based on the previous system? Let's go ahead and put this into the, let's go ahead and put this into our beautiful new folder. Where's my folder? I can't find it. We'll make a new one. Call this the risk first approach. Yeah, right. So yes, the win rate has actually gone down big time. right? The win rate for this specific system, let's get rid of the MAs now. The win rate for this system has now been reduced. Huge, okay? Huge. Have we also taken losses? Well, no shit, right? That's what win rate means, right? So we've taken losses as well. In the other system, we didn't take losses. Damn, okay. Did we also... Okay, so those two things happened. Now let's talk about the positives. How much did we make? $3.5, 4.4, 3.4, 2.4. So we made plus 2.4 RR. That's already, guys, that's already, remember the initial one? We took how many trades? Do you remember? 2 trades. Both of them had what kind of RR on average? For the previous system. For the signal provider system. About 0.2, 0.3. So at the end of it, here we made plus 0.5. Okay. So for this system, we made plus 0.5 over that same time, right? And for the risk first approach, we made plus 2.4 for the same amount of time. Okay. Now, during that time, what's different between the time spent in both systems? Except for the win rate. What else was true about the system? What was different between them? Perfect. James got it. Because again, I introduced it initially. The money was not locked up. Look at the red. During all of these points here, your money was not locked up, which means what could you have done with that money at that time? Cows. Yep. You could have spent it on any and all potential other markets, right? You could have put it to work elsewhere. It's not locked up. At the same time, let's go a little bit even further. Let's talk about this specific trade here. Let me ask you 2 questions. What can it do in regards to going to the top? How can it do it? What are the 2 ways that it can get to the top? Fast, slow. Now, in relation to the size of the stop loss and based on how much this price usually moves, what is the actual only way that it can go to the bottom? Azri says slow, but no, the answer is fast. It's a small stop loss. Price is either going to take off slowly or quickly, or it's going to take you out almost instantly. So hopefully, as I start with this risk-first based approach, people that are new or have issues with their losses, on one hand, see that losses actually make you a lot more money, 1. 2, faster stops being hit is much better than slowly waiting and drawdown, slowly waiting and drawdown. 3, your money is open to being used most of the time in any and potentially all good contexts or good markets with your good strategy that you find. So then the question becomes, would you rather be someone that has a system that now has very quick losses and your money is open to you and not locked up? Or would you rather have a system with a 100% win rate where you can barely make money and you might have money locked up for years at a time before you make a small return on your losses, on your potential risk? Right? And the answer becomes it becomes so easy. So then all of a sudden, you're no longer worried about learning a strategy for the purpose of being right or for the purpose of having a higher win rate. Now your full-on main focus is, how can I take huge winners or good winners and how can I get out of trades fast if they're wrong? Basically. That's now what you're wired to start thinking. And that's because now you've switched yourself from, I need to be right, I need it to be in the right direction, and you've switched it entirely to, I'm risk first, I know losses are the only way that I actually make a lot more money, and I can put my money to work when I'm not making money on this given thing. Here I go. All of a sudden, you need to take losses. All you have a feeling for is, how can I maximize my risk so I can start taking losses more often? How can I now do that? It's part of my system now, right? And that goes to the next point, which is now, if you understand risk first, So now your main focus is no longer, how am I going to be correct? And now your main focus is, how can I get the most out of my actual entries and get out fast, right? How do I find those kind of areas? Well, now all of a sudden, if that's your focus and now you're actively seeking wins and losses, when you know what you're now looking for in that strategy in regards to the kind of trades you want to look for it, what does that mean? When you start finding these kind of trades now over and over and over again, what are you doing indirectly by continuously focusing on risk? What am I finding for good risk? Where can I take risk? What are you doing every time you find that now with thousands of markets? And you're not worried about the live market. You're worried about just finding examples of where you can make good money. Exactly. Pez got it. The second your focus moves from, but the strategy needs to be right. The second it moves to, I am now risk approached. I want my losses. I need to find ways to take losses. I need to find ways to take fast losses. All you're focused on now is, how can I find trades where I can take losses or quick or big wins? And all of a sudden, you're maximizing your experience, right? Because now you've gotten rid of that balloon. So, okay, actually, people are going to be watching this for the first time, right? So I'm going to draw it again. But here's you, right? Here's you. You have scissors in this hand, right? And you don't even know you have them there. Here's a balloon, right? Here's what you want, or you think you want. You know, I have FOMO, I have my low win rate, I'm sad, whatever those things were, right? There's a balloon of shit that you're very upset about, right? And the scissors right here that you forgot that you have in your hand are called experience, right? And very simply, if you notice, if you put experience to work and just cut this, you don't have to fix any of these things individually. These things just fly away into the sky and become useless, right? Because now, the second you're focusing on risk, well, you know you need to take losses. So all of a sudden, your win rate, your sadness, your FOMO is no longer important because you know these things are attributes of taking more bad trades instead of more good losses, right? And you know that doing this is going to teach you to take more good wins plus more good losses, right? So the second we switch our entire mentality or our entire subconscious to be wired and thinking about the fact that positive RR, lower win rates, or win rates that are not high, get my losses in quick, start manage in a way where I can get money off the table so I can put my money to work, all of a sudden you're now maximizing experience through the things that you should be maximizing. And all of a sudden, everything becomes easier. So let me see what I wrote here. If you understand the risk-first approach, then you know what you're looking for in your strategy when it comes to maximizing experience. You start looking for ways to take faster losses, and then you learn inherently that's a very good thing. You also start having freedom of risk, which means that you have now the choice to invest and where to invest instead of constantly being on the sidelines, right? So instead of being the trader that took 3 100% win rate trades, yay! Woohoo! Woo! Woo! Right? Instead of being the trader that's doing that with 100% win rate, right? You can now have that money not locked up and have the freedom to choose where your risk goes. And that's one of the most powerful things you can do as a trader, is to choose where your risk goes. You can also focus on maximizing your experience so that you can understand how the concepts and tools you're learning work, right? So now, the concepts and tools you're learning, you're no longer worried about them being wrong analysis. You're no longer worried about zones failing. All you're worried about is, can the current concepts and tools that I've learned get me into one of these trades over and over and over again so I can take faster losses and make more money? And all of a sudden, all these little attributes, but meant I'm losing trades, but meant I have 3 losses in a row, but meant I lost so many trades this week, they all become a fucking joke. You start laughing to yourself. You start going, holy shit, I cannot believe the entire space, the entire signal provider space is stuck there, right? Is stuck there. People are stuck following this kind of shit, having money locked up, not doing anything for them, most of the time blowing their accounts because most of the times these stops aren't even at zero. Most of the times the stops are, these are even smaller, and these stops are even bigger so that when it's a real loss, they just lose money over and over and over again. And all of a sudden, you start going, holy shit, I need to take losses. All I'm going to be doing long term is losing if I'm not taking losses. How does that make sense? If I take losses, I'm going to make money and make endless amounts of money. But if I don't take losses, I'm going to lose more money over time and done. And the game becomes very clear to you. The game becomes so clear that you never need to even think for a shadow of a doubt for another second about the fact that a loss is about to be had. You take your trade with the fact that the loss is going to happen and I want it to happen because I know that I've now tested this from a risk first angle and maximize my experience. So now I'm never going to make a mistake. Right? So we need to start very simply, and this is all I really wanted to get across in just the start of this webinar. The start, by the way, an hour in, yeah, funny. Just the start of this webinar, and I'm sweating already, so shit, is for the people that are brand new and seeing this for the first time, this is why I've taken so much time to rewrite the remastered course. And it's because I knew that the initial videos would have to be me sitting here going, you guys need to disconnect from every way that you've learned before or the ways that you think you're supposed to be learning this. The underlying strategy will only matter if you've already made the promise to yourself to do these things right here. If you haven't made those promises initially to yourself, no matter what I teach you is going to feel hard, confusing, very sad. You're going to be depressed. It's going to suck for you. But on the other hand, if you're focused on these, then all the things that you're about to experience, the losses being wrong, are all just going to be parts of experience, adding to your experience, and that's adding to your risk-first approach, risk-first side approach. And now all that comes with it is progress. And you are set for life. There's nothing more that you need than those two things and then the underlying strategy, which of course is going to be taught. No shit. This webinar is going to be 4 hour. No, I don't think so. Those are the two main things I want to touch on. I'm just double checking here. So yeah, so the main things is risk first, understanding that just because you know where price is heading or how it's going to get there does not mean you're taking good sound trades, right? Which takes us to our next mini point, which is just positive EV, right? All we've done as traders ever, all a good trader does, is execute positive EV. Very simply, if you're brand new, all that means is expected value. You probably learned this in school. It's a very simple equation, but it's an equation that most people don't understand. And hopefully, just with my explanation, you started understanding why risk first is so important, right? EV, I'm going to do this very quick because there's no point to take a long time on this part, is very simply expected value, right? What that means is that over time, if this value is positive, that means you're going to be making money. That's all it means. It means that the expectancy of thousands of trades on end up being positive. And the way that EV is very simply calculated is by looking at how much do you win, right? How much money do you make every time you win? And what percent of the time does that happen? So multiplied by the percent of the time that happens, minus how much do you lose times the percentage of the time that happens. That's all. Right? So it's how much you make times your win rate minus how much do you lose times your loss rate. That's it. All we do as traders is manipulate this right here. That's all we do. We find ways to make this number positive. That's our only job as traders. And that goes hand in hand with what? A risk-first approach. If you understand this is what you're looking for, then you're going to look for ways to make more, no matter what your win rate is, than the amount that you lose, right? And then hopefully you're going to be doing that through the way that we talk about, the turtle and the hare, right? You're going to be doing that through the ways of not locking your money up so you can keep doing it over and over and over again. So you can put your money to work over and over and over again, right? And again, this is going to be taught later on in regards to how you want to start calculating it. But very simply, all it means is you want to make more on your winners than your losses in regards to the win rate. That's it. So for instance, if you risk $1, so if you're willing to risk $1, but you make $5, right? Then that's going to potentially be positive based on your win rate, right? So can you execute a system like this with a 30% win rate? Yes or no? Yeah, of course, right? So again, same thing. If you're making $5, 30% of the time, we're going to do 0.3 minus how much are you losing? You're losing $1. How much percent of the time? 0.7% of the time, right? Your EV is always going to be positive. 5 times 0.3, 1.5. 1.5 minus 0.7. 0.7 equals 0.8, a positive number. So you're making money. Every trade that you take, on average, you're making money. Whether or not it loses or wins, you're making money because of the way that expected value works. And all we do as traders, right, is very simply, we start off, as I love to say, there's two things we do. We start off as I think I forgot this, but we start off with the scientific method. So we start off as scientists, okay? And then we graduate to data technicians. That's all we do as traders, to basically very simply put it, right? As a scientist, when we first start, all we're doing is we're doing the scientific method. We're saying, what's the hypothesis? Using the strategy outlined right here, if I take a trade and manage it in this specific way, with these specific partials or targets, or take off money 3 candles later, blah, 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 is it profitable? And then you sit there and you make that a hypothesis, right? You make a hypothesis over what you believe to be true using the concepts or tools that you've learned. So now, again, the hypothesis, the reason it's great is because you're not biased to it. You don't care if you win or lose. All you care about is proving the hypothesis or testing it, right? That's all you care about. So now you're not worried about being wrong and stuff. All you care about is, I want to prove this hypothesis. Let's see if it's the case. And as you prove it, you slowly become a data technician, where now you have data supporting the things that you've proven, and all you do now as an independent trader is execute that data. That's what trading is. So you go from being a scientist to a data technician to being a trader. And being a trader is nothing more than executing this thing right here, right? Which is built on your EV. That's it, right? How much you win times the win rate minus how much do you lose times the loss rate. That's it. And if that number's positive, right, because you now have the data to prove it, and that data is proven through your hypothesis that you formed beforehand, where you've now taken into accumulation many wins and losses, well, it's time to put your money to work because you know how to do that now, right? So that's expected value. And that is why RR is a very important part of trading. So like this trade of 1-4 is a phenomenal trade if you take off, your entire risk at 4, because you're making 4 times your risk. And if you can do that with even 30% win rate, you're guaranteed to make money, right? I made a little thing. This is I don't know. I feel like it's sometimes broken, so I'd be a little bit careful, but I just made this for fun. So I'm going to do this for fun right now. So assuming a risk of 1%, an average risk to reward. So let's say 4, you're making 4, or let's say 5, and your win rate is 35%. And these are all randomized with the exact same statistics. What do you guys see? Do you see this as a system that's making money or not over time? This is over 100 trades right here. Is it making money or not? Right? Yeah. There's nothing more to it. It's making money. That's it. I've proven the math. My system that I have found out I can get a 5RR for around a 35% win rate makes me money. Done. Right? And then you can look at it further. So this is just all 3 of them together, just showing that they can be different. So all 3 of these curves are created through the same thing. It's just through different deviations. So because you don't know how many you're going to win in a row, lose in a row, it can be random, right? Because it's probabilities. So that can be random. So sometimes you'll be this orange line where you're making money a little slower. Sometimes you'll be the gray line faster, or blue where it's very fast. And here is another, this is for about 500 or more trades of compounding. So if you're just compounding your account, you can now see why compounding is so great, right? Is this a profitable system, guys? Even randomly, is it profitable? Yeah. Watch, I'm gonna refresh it a few times. Refresh. Is it still profitable? Through different alternates, still profitable. Let's refresh it again. Oh, still profitable. For some reason, no matter how many ways that we try to distort the data, it turns out to be profitable. Well, that's because there's positive expectancy. Positive expectancy. The overall final number might be different because of how you might win or lose in a row, but the underlying, through proper RR and risk first approaches and just executing and losing over how many? Over 65% of your trades, if you're losing them, you are making endless amounts of money. And here's a curve for 2,000 trades, right? So this is your compounding curve for 2,000 trades, which is already out of this world. And here's without compounding. And no matter how many times I reload this data, it makes money no matter what. Sometimes it makes less money than other simulations, but not any of these simulations end up at zero because the value is positive. So should you take your losses if you can create a system through your scientific study, blah, 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 technician? Should you execute a system like this and love your losses? Fucking savor them, eat them up like little cupcakes. Or should you be terrified, upset, restart, go find a new mentorship, go find a new mentor to teach me the new system, blah, 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 blah. Right? And it's done. There's nothing more to do. Put the money to work. There's nothing more to do, right? I like cupcakes. Very good. Right? And now look, if your average reward to risk is like 12 RR, and your win rate is 10% win rate. Do these look like they're profitable? All three of them, let me ask you, do they all look like they're profitable or no? Right? So they don't look like they're all profitable. Now they will be over time, right? Look, if I reload it now, let's reload. Sometimes they're positive, positive, positive. Sometimes they're negative, positive, positive. But if we keep trading that same system, are all of them making money now? Over 500 trades now. Yup. Again, a demonstration that based on win rates and stuff, you need to be used to drawdowns and losses. They are part of the game. Let's keep going. Are they all making money long term, guys? Right? And again, guys, no matter how many times the simulation is ran, every single one of these systems will continuously, just in different intervals and at different times, make money. Sometimes one will do very, very well because the data was just really, really good. You got maybe many wins in a row, a very good management of losses. Sometimes it'll be a lot more 50-50-ish, right? Sometimes it'll just take off. Sometimes it'll take off and go into normal drawdown. Now, guys, if I continue this curve right here, do you think it's going to be at all-time new highs in another 2,000 trades? Or do you think it's going to be at zero? Yep, it'll go higher. And the reason for that is because you're executing positive expectancy. How can you prove it's positive expectancy? Well, what's my win rate? Right? What's the equation? I gave you the equation. Win rate's 10%. What's my reward? 12. What's my loss? 90%. What do I lose? 1. Okay. Right? You can just run the math if you really wanted to. I make, how much was it? I make $12 or 12,000 or 120K, doesn't matter. 10% of the time, 0.1, minus I lose 1, 0.9% of the time. Am I going to make money? Well, what's 12 times 0.1? It's 1.2. What's 1 times 0.9? It's 0.9. Is this a positive number? Let's go make money. Now, if you built out a system that's even crazier, where because you're wrong so much of the time, your average reward to risk is even higher. Let's say it's 16. Again, are all of them positive before 100 trades? Well, in this case, they are, but they don't have to be. Let's reload it. Reload it. Okay, well, actually, okay. Are all of them positive before 100 trades? Look at this one. This can be scary for a lot of people. Now let's see, so that's randomizer number 3. Let's see what randomizer number 3 did when we get to 500. Is it now positive? Uh-oh. Seems like it just makes money for no reason over and over again. And do all of them make money over 2,000 plus trades? Yep. So Azri says yes, but it would have been blown. Where was it blown, dude? Show me where the money was blown. It went from around 100K to just under 50K. Back up. Where did it get blown? Where did the account get blown, dude? 50K? I haven't heard that 50K is a blown account. Oh, yeah, if funded, sure. Well, you would reduce. Of course you can blow funded, yeah, but that's different. We're talking about 100% of the risk. You could make this 0.01, right? What the fuck did I do? Here, 0.01%. Okay, there you go. Was the account blown? Okay, we just reduced the risk. Because, again, we're talking about this from a standpoint of full account management that you have. We're not talking about, we're not just talking about some random shit, right? And yeah, I'll make this thing, once I actually perfect it, I'll make it available, because there's some things that are broken with it, but it's a very good appreciation for risk, just to showcase the fact that all we do as traders is we hunt positive EV. And just so you guys know, because I'm not well versed in Excel, it took me, I was working on this thing on Friday, or wait, no. Yeah, Friday night. It took me 4 fucking hours to just get this thing working just to a normal error. Like, I'm so bad, dude. I'm so dumb. It's actually insane. But I'm gonna perfect it a little bit more and then give it to you guys. But I wanted to do this because I thought, well, my approach was that I wanted to talk about this risk-first approach with a lot of people on this day. And for people that are brand new for the remastered, I really want them to visualize this. I really want them to understand that a win rate of 10% means nothing if you have positive EV, right? Similarly, a 50% win rate at 1.5 or 3 risk to reward, is that a good system, guys? I mean, you guys can see it firsthand. Let's see it by 500. Right? Look at this. And then, are these systems all making money, guys? Right? Doesn't matter. And now, similarly, let's go to our good old signal provider, okay? 0.1 average RR with a, well, actually with normally a 50% win rate, but a little bit higher, 65% win rate. Is the system going to be profitable? Let's see, guys. Uh-oh. Uh-oh, what's going on? Uh-oh. So, once again, just for a real understanding, your huge win rates don't matter. Your win rates are fucking worthless. 80% win rate, here I am. I'm claiming 80% win rate for my signal course. Here I go. Uh-oh. Uh-oh. 80% win rate, guys. Hey, at least 8 out of the 10 trades we take are still winners. At least we can sit there and be happy about our winners. Well, good job, I guess. You got your 100% win rate. You're almost at 100% win rate. Almost there, buddy, but did it really help you? .3 RR, an 80% win rate. Oh, not looking too bad. Look at that. Okay, it's a little bit broken now. It looks like it's doing well. Hey, look at that. I wonder why it might be doing well. Could it be because this is positive EV? Is it positive? I don't know. It might be. Do the math for me, guys. 0.8 times 0.3 minus 0.2, right? It's positive. And guess what? It makes money. Now let me ask you, did the system with lower win rate make more money, or did this system make more money? Let's look on average at the compound or no compound. I don't really care. What is this getting us to? So from 100K with compounding, this brought us up to, like, at the highest 350. So let's maybe run some more rerolls. 300, 300, 250, 350, 300. Okay, not bad, right? Now, instead of 80% win rate, we're going to say, fuck the 80%. We want 20% win rate, and we want a 6RR only. That's all we want. Let's see what happens by that same time. 500K. Oh, wait, let me go down. Oh, my bad. It's actually at the 4.5 to the power of times 10 to the 09 because you've made so much money, more than the world can even fucking hold in it. I wonder if it's easier to build out a higher win rate where you're constantly correct, or if it's easier to build out something where it's lower win rate, and some of the times that you're correct, you at least make 6 times on your reward, on your risk. Which ones do you think are easier or harder to do? Do you think it's easier to build out something that's correct 90 or 80% of the time, or do you think it's easier to build something that's correct maybe 20% of the time? Yeah, I'd probably settle for the 20%, right? Surely. Would anyone here be upset with having a curve that looks something like this through your trading? Okay. So why are any of us sitting there worried about drawdown periods or huge drawdown periods? Look at this drawdown period. It went from 400K to 300K, almost 100K lower over all this time. So let's change the way that we wire our brains and the way our subconscious thinks about risk, about trading, and all the fun stuff that comes with it. And then once we've done that, we can now make a full-on reiteration of true strategy and trend following. Now, because we are ready to take losses. Now, because we want to take losses. Now, because we know that we want faster losses. We're not here to sit and see if, but maybe the loss will maybe pan out okay, and maybe it'll become a win, but maybe it'll turn around. We're here to go, if it's going down, I need you to go for it faster. Free my money up. Free my money, go! Go to the loss. Take me out right now. We want that to happen. We don't want to be the trader sitting there, but maybe it will correct. But maybe it will turn around. Maybe. I want to be right or wrong. Go. Go, go, go. I have management in place that says if it's not go, 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 we're going to probably look for ways to get out at break even so I can free up my money again and not take the loss later. We are looking for ways to actively take losses, take faster losses, or manage our ways out of having money on the line so we can put our money on the line anywhere else. So I hope a lot of you can see why I held off a lot on just releasing a little remastered course that's going to give you all the little answers, because the hardest part of the remastered is actually talks like these, because they're the only things that are going to set forth a precedent for how someone that's actually going to make money is going to make money and how they're going to assume and view the concepts and the tools. It's necessary. None of these concepts or tools that are taught here are going to matter if the person doesn't initially understand that losses are the only way they're going to make money, that having money available to trade, just in general, not put to work in a trade like, oh, here I go, I can't wait, woohoo, Mickey Mouse, right? Same thing goes, right? The same person trading that system here was doing it here, right? Don't forget, made money, barely, and now what? Guys, now what? What is this person doing now? This person that's trading that way has now held for 2 years in drawdown. Now, again, let me ask you, is it more likely to come here? Is it more likely to come here than it is here? Yes or no? It is. So again, the only way price comes here is if this company goes bankrupt. Now, companies can go bankrupt, but the odds are it's likelier to come here. So the person might still be right. His probability of win rate is probably around 100%. But look what's up with his money. His money's locked the fuck up for over 2 years. Do you think this is going to come up here in a year, or do you think it's going to at least take probably 2 or 3 years before it ever reaches this area here? 2 or 3 more years, likely. So this trader is going to have his money locked up for over a decade, just waiting for price to come to his 100% win rate. Let's not be the people that sit there thinking we need to be the signal provider side, 100% win rate, correct, cut my losses, cut my wins quickly, let my losses really take their time and draw down. Let's do a full flip. Let's reevaluate the way that we approach risk and experience and all that, and let's approach it from a standpoint of, I'm here to lose. I'm here to take fast losses, but I'm only doing that because I know that's going to create the best winning opportunities for me that are over time going to turn positive EV, because that's the only way that I make money. Because after all I am is someone who works in executing the data technician's job, which was me before, but now I'm a trader. And all I am as a trader is someone that's executing this thing right here, the data technician side, perfectly. That's it. And right now, most of us, well, not me, not a few people, I can name a few people, but I'm not going to name people. But most of us, especially those of us that are new, are in this boat. We are scientists. All we're doing now, actually, we're not even scientists. We are the We're in science class, okay? What we're doing is we're laying a foundation so that we can actually start asking questions, right? What I want to do for you is I want to lay a way to think about the markets, a way to view the periodic table, a way to think about atoms. You know, how do we think about the world? In matter. We think about it in atoms. We think about it in what is it? Electrons and blah, blah, blah. That's what I'm doing with this. Let's rewire your brain. Let's think in these ways. Let's think in experience. Let's think in risk first. Then you can become the scientist who starts to ask real questions, right? That can be real questions you ask in the webinars, or that can be the real questions that you start asking yourself. What kind of system would make sense here? Does this system and its win rate make sense? Does this management system make sense? Does this make sense? Now you're a scientist. And now, as you start asking the real questions because you've done the main things, you can now have the data. And now you're a data technician. Now you can manipulate the data. All of the things that I'm going to teach you how to do, and it's actually already available. So those of you that know, you know, it's in the process, right? It's all there. But you're going to now learn to manipulate the data, to understand it, to see it firsthand, to see that you're actually profitable, to see it firsthand in an equity curve that you're going to create for yourself. Because remember, guys, we have endless amounts of members now, that are able to consistently create their own curves with their own data, not random, not randomized like this one is. This is random, but fully unrandomized, fully with their actual testing, with their actual testing. They're getting to see this thing happen for themselves. You're going to see how to manipulate that data and become, as we love to call it, you're going to become the data technician. And the second you've become the data technician that fully understands the data, you've done all the work. The scissors have cut the balloon. Nothing else stands in your way. All it's time to do now is be a quote unquote trader. People forget that being a trader isn't just, hey, I'm a trader. A trader is someone that was a data technician before, was a scientist before that, and was a little science student before that. Many people forget that. A trader just sounds very cool, but there were all these steps in between. And those are the steps that we're working on going through now, right? Okay, it's time to sip some coffee. Okay, I'll sip some coffee. Disclaimer. Don't worry about the disclaimer. Disclaimer's I'm gonna edit it. I'm gonna put it in and then export, because it's gonna go in the remastered course, so it has to have the beat, you know. You know, my little song. So it's going in there. Don't worry about it. Love that beat. Yeah. There you go. The bum 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 bum. I'm gonna re-record it with my own sound, with my own voice. Okay, who created this? I found it online somewhere. I bought the license to it. Okay, guys, so remastered students are now watching this and understand, hopefully, if they've actually watched it through and not skip just to the content or the concept side, have understood how important, because this is part of the psychology, right? This is truly the part of the psychology that most people never touch on. No mentor will touch on this. But we've now touched the two main things that everybody is doing or should be doing. Risk first, we understand why it's so important. We now see firsthand why losses are necessary, all the fun stuff we discussed. And as a result, we can now focus on the things that matter, which means that now we're maximizing experience. And as we do that, we become unstoppable. It's as simple as that. So let's go back up now. Go have a little read with the team here. We're gonna go through this a little quicker. I want to hit everything. There's too much stuff, guys. There's too much stuff. It feels like I'm on like a Twitch chat here. So I'm going to start at 12:33 p.m. So if anyone said something above, I would love to hear it. I might rewatch it in another future webinar to find it. But feel free to repost it, okay? I'm going to read from 12:33 p.m. So if you are above, feel free to hit me. I hope you're doing well. I've watched the course and I've started collecting pictures and data. Very good. What would you recommend we do when we hit at least 500 or 1,000? By that point, you can be either backtesting or forward testing, right? And just recording the actual data into a sheet. So you can now see firsthand how your own data, how your own trade choices, you don't even have to do it through backtest, right? You can just do it through finding the trades. Like you could go, let's say you're on the stock side, right? If you're doing like the MA surfing thing, right? Like, I don't know, that's not clean. but like Walmart here. So I'm in this trade right now, right? If this is a trade you would have taken, I mean, I'd find examples where they've already happened. So let's see. Is there a really good one that's like super clear, that's not kind of shite? And some of these are hard, but maybe like this one. So you find like real examples like these. So you can see the context here would be very, very bullish, right? And then you would record this. You'd probably be like, I probably got in at a price around 139.54, a stop loss around 137.34, and then record the run, record, where it took you out, or if it didn't take you out, etc. And then also find examples of trades that you would have taken. You could go through play by play like this and be like, would I have taken this trade? Is this a trade that's good enough for me? For me, no. Personally, as MentaFX, I wouldn't. But you go through and you'd be like, is this somewhere where I would have taken a trade, right? As it started to surf this. I would probably say no at this time. No. And then it breaks. So nothing there anyway. But yeah, you would go through and you'd start to actually map out an equity curve that is based in your own etchings, right? So you want something that has been done through with your blood and sweat, and tears, your hand, right? You want to know that the thing that you're looking at has been done with your brain, your analysis, your ability to view things and decide whether or not they were worth taking or not. Because then everything that you view past that, like the equity curve and stuff, as you're viewing that, you're doing that from a lens of this has been created through only and only my approach, right? And the second you do that and you have something to look at, you go, this is a system that I can follow and is profitable. There's nothing more to do, right? And then you can move from there. So yeah, that's what I would do. Just wondering, with the 20 win rate, what do you think about not getting your SL got hit all the time and re-entering once another opportunity sets up? Would you consider that a good risk management as well? Well, so that's the thing, right? This is a very, very basic breakdown, right? What a lot of people need to realize is that many of these trades would not be losses. A lot of them could even be just break evens. A lot of them could even be minor profits. That is why trading is so beautiful, because these EV numbers, even if they were just full on -1s, are profitable. But the fact that we have the opportunity and the choice to cut losses, to manage accordingly, to manage in better ways, we can make a lot of these even better, right? But yeah, that's one way, potentially. I'm webinar 67. Should I jump to webinar 100 and start there, or keep going through? I would keep going, but as per the welcome section, webinar 100 is a great area to start too, because it shows you what you're working towards. Hey Anton, I've joined the mentorship this month after a few months of watching your public YouTube videos. I'm already at webinar 20. That's awesome, dude. And I'm currently forward testing a basic system, and I'm wondering all the time if I should test my system over a large amount of data to get the confidence in it, or should I just keep playing with the charts until I'm up to date with current webinars? I'd probably